Hello, all. Welcome back to Tech Tune Up with me, your host, Paul Meeks. Today is December 4, 2024, and let me be the first to wish you a Merry Christmas and a Happy Holiday if I don't see you between now and then. I'd like to start off our show today with, unfortunately, some somber news. You probably already read this, but very unusual, very scary. Brian Thompson, who was the CEO of United Healthcare, which is the insurance company within United Health Group, which is actually the largest stock with an 8% position in the Dow Jones Industrial Average, was murdered on a New York City street outside of his hotel this morning. And he was on his way to UNH's Analyst Day. And they say that he was killed by a gunman with a silencer. So it doesn't look like it's a random murder. Anyway, very weird, very sad. Of course, our hearts go out to CEO Brian Thompson. So let's get through some of the tech news. We haven't been together for a few weeks, but let me give you the latest and greatest and the broader implications as I see them. So first of all, Microsoft. Now, I want to read you a quote from Microsoft's CEO, Satya Nadella, one of the most respected execs in technology, what he said just a week or so ago at a conference. This is a quote. "While I am optimistic over the next several years on the AI build-out, I have also been thinking there will be a temporary AI digestion phase for the industry in the first half of 2025 due to return on investment concerns." That is a pretty important data point about AI infrastructure build and the follow-on AI products on the other end of that pipeline from a super credible source, Satya Nadella, very popular, very well-respected CEO of Microsoft. Next, we have Nvidia. Now, between our last sessions, Nvidia reported their results. As I told you, they were going to be great. They were forecast, very bright for Nvidia. But I will tell you this, there might be a chance to buy Nvidia a little bit lower because there could be some angst around the results over the next quarter or so as the company transitions to their Blackwell chip. It will have nothing to do with demand. Demand from all their customers is really, really strong. But if there is a manufacturing ramp glitch, which is actually not unexpected in semiconductor manufacturing, particularly high-end designs, you might get some people saying, oh, the AI has gone from a boom to a bust. Let's get the hell out of Nvidia because the stock is up so much. I actually think if it happens, and I'm not promising it will, it might happen, give you a chance to buy Nvidia a little bit lower. And you know what? I will be buying it aggressively then, and it's already a large position for me. Actually, the only two stocks that I like in the Mag 7 are Nvidia and Amazon. Next, we have Comcast. This is very interesting because Comcast is spinning out its cable properties. And one of its cable properties is CNBC. The other one is MSNBC. And what happens is spinning out your cable properties is one thing. Finding a buyer for them is something else indeed. And think about this. It may come to Trump's desk to approve the sale of MSNBC to somebody. Can you imagine that? So that's Comcast. Next, Palo Alto Networks, a stock that I've warmed up to in recent quarters, recent months. I had panned the company, but they reported another good quarter, gave a good outlook. And my key, which I now feel better about, that's why I've gone from bearish to neutral to now more positive, except the valuation I think is still too steep, is they've diversified nicely into corporate clients. And they also seem to have some nice internet and AI game. And so I think Palo Alto Networks is a stock. I'm not going to buy it now. I missed it, right? It's had its run, but I will buy it on a dip. I've been recently sold, you might say. Next is Alphabet. Alphabet is just getting absolutely smoked. And we seem to say this every single time we appear on this program, by regulators and by some emerging comps that may, with AI propelled search, take some market share from Alphabet. Now, Google within Alphabet already has about 90% of the search share. And so, yes, they can't grab any more share, but they can lose a hell of a lot of it because they essentially own the whole pie. We'll see what happens. Now, the saving grace and the reason that I'm still in Alphabet is that at the end of the day, no matter what happens, you have to have the data. And Alphabet has locked up the data. And so they're always going to have the keys to the castle with the data. So we'll see what happens. But anyway, whether it's the regulators here or abroad, or whether these AI-driven search startups like Perplexity, I think they have a threat, and it's probably the more serious threat than they've had in some time. Next, Supermicro, a stock that we got out of during the summer when they were accused by Hindenburg Research, a short seller, of accounting fraud, and then followed up by saying, yeah, we got accounting fraud because we can't file our 10K. That was back in the July timeframe. Anyway, the stock got crushed, no surprise, but it's bounced back. And one of the reasons that it's bounced back partway is that they had the conclusion of their independent audit committee on their board of directors say that the investigation is over. The company wasn't perpetuating fraud. Well, here's the problem. From my understanding, the audit committee was a committee of one person, and that person only came to Supermicro a couple months back. So I don't know if the judge that has rendered this sentence is particularly objective. What I want to do is I want to see Supermicro retroactively announce those troubled results. When they do, then I might be interested. But in the meantime, they haven't filed their last 10K and they haven't filed their last 10Q. And so we need them to follow up. Now, one of the things that they did do ASAP is they fired the CFO and promoted somebody else to also be the chief accounting officer. You had the chief accounting officer and the CFO, the same person. You got to segregate those duties, and hopefully they do that going forward. But I don't think the company is out of the woods yet because we don't know what those revised, and they will be revised, SEC filings for their financial reports will look like. Next, I got a pretty bad feeling about consumer electronics based on the admission and a really poor quarter for Best Buy and a really poor Christmas selling season guide for consumer electronics for Best Buy. So anyway, this looks pretty bad. And remember, particularly the Apple fanboys over the last year really have talked about an enormous Christmas selling season for AI-driven PCs, and also what some analysts on the street for Apple call the mother of all iPhone upgrade cycles driven by AI. It doesn't look like that's going to happen. I told you a while ago I didn't think it was going to happen, or at least the greatness was much exaggerated. But I think it could be pretty nasty actually based on Best Buy's admission. Next, we have Intel. This is sad. This is a stock that I've been covering since the 80s, right? I've been at this a long time. Pat Gelsinger, their CEO, was out, but I actually wrote a note. Take a look. It's posted on our platform, Wall Street Beats, in which I half defended Gelsinger. Here is the interesting thing. I think he did all the right things since he became CEO in 2021. The problem was the company was too deep in the hole. This guy, actually, when he worked at Intel the first time in the 80s, was one of the architects of the i486 microprocessor, which really gave Intel some cred. And then a bulk of the 2001 to 2009, he's the chief technology officer. And that was still in the heyday of Intel before it collapsed. So you could say that this particular dude was responsible and even directly responsible for the early years of the company's greatness. And I don't think he's responsible, or at least he's indirectly responsible for its implosion. I think Intel, I've said many times on this broadcast, the gang that can't shoot straight. I think the $8 billion that Biden administration gave to Intel as part of the funding from the 2022 CHIPS Act, I don't want to say it's going to be wasted, but man, we could have done so much better with that $8 billion than give it to those knuckleheads. So we'll see what happens. But I think, Gelsinger, rest in peace. Actually, don't think it's all his fault. Company was just unfixable. This is kind of interesting. One of the reasons that I like Amazon, remember I only like two companies, Amazon, Nvidia, and the Mag 7, is that Amazon is hosting this week, as we speak, a AWS, Amazon Web Services reInvent conference in Las Vegas. And they have some interesting things to share. And we know, because Shopify has told us so a couple of weeks ago, that the e-commerce Christmas selling season looks pretty strong. Just not the crap, the consumer electronics that's sold in stores like Best Buy. So anyway, I'm bullish on Amazon. I bet that they repeat what Shopify told us and have a very nice Christmas quarter. However, we won't get that news until probably about the third week of January. So we've had a couple of good quarters last night in particular. So I'm feeling a little bit better about the sector. Good quarter from Snowflake, Okta, Salesforce.com, Marvell, Pure Storage, all reported last night. Stocks all up today. I think Salesforce, because it is a mega trend stock, is particularly significant. Now, their stock is up a lot today, and the company did meet expectations, but they only grew their revenues 8%. So it's expectations that had been actually lowered over the last year or so. Like, for example, Nvidia last quarter grew its revenues 80%. But they did talk about their Agentforce AI product suite. And this is important, that they get people on board, not just customers, but the investing public, as their perception that they're not going to be disintermediated like some of the other enterprise resource planning software legacy companies by AI, that they actually will be a benefit from AI. And what they were very careful to say, and I think it's driving the stock today on last night's conference call that I listened to live, is that their enterprise customers, this is an enterprise software company, not a consumer software company, are seeing some gains through their new AI suite that actually take what you might be able to get out of ChatGPT and some of these other large language models and do much more. Because if you think about it, if you could do everything in the enterprise on ChatGPT, these guys really would be screwed. So we'll see what happens to this suite, Agentforce, AI driven. Let's see if it really delivers a acceleration of revenue, because 8% quarter to quarter for a tech company ain't much to write home about. I'm going to be super interested tonight after the close with the results from Synopsys. Synopsys has always been my favorite EDA company, electronic design automation software company. This is software to manufacture semiconductors. They actually had a horrible quarter last quarter. The stock imploded. They've come back since, not all the way, but they're starting to come back. And the price chart is now looking pretty good. So technical analysis, not fundamental analysis, technical analysis tells me that we could have at least meet expectations quarter, maybe a meet and beat, because Synopsys has actually been a pretty poor tech stock and one of the worst in my portfolio. You haven't lost money on it, but it hadn't been great. You just wanted to have more and more and more Nvidia, but we'll see what happens with Synopsys tonight. I'll be following that closely and I will report back. I think Tesla is kind of interesting, right? You have the Elon Musk Trump boost, though a Delaware judge has for the second time blocked Musk's $50 billion plus variable comp bonus package, which was stupidly agreed to by, frankly, investors, shareholders, and the board of directors many years ago. But we'll see what happens. That's obviously a negative. Trump talks about rescinding the $7,500 credit to buy EVs. But then on the other hand, he's named Ramaswamy and Musk to lead his DOGE effort, the Department of Government Efficiency. So some people are saying that Trump isn't the president, that our de facto president is one Elon Musk. But I see the relationship between them seems to have some positives and some negatives. We'll see what happens to Tesla. I think it's grossly overvalued. And then I mentioned before, Shopify told us, at least from their perspective, that we're going to have a pretty good e-Christmas. Again, I expect nice meet and beat and guide forward results from Amazon in January. So let's take a look at my buy list. Hey, before we move on, I want you to start filtering your questions in. I'll take all your questions as time allows at the end of our final segment, which is Tech Trends, in just a second. I'm not going to spend a lot of time here with the picks. You know my color scheme. Yellow are stocks that I own, but I'm just holding. Greens are the only one that I'm buying with fresh capital. And you can see on this list, you have Amazon, Nvidia, and Taiwan Semi. And some of these are my favorites, but I will tell you that I'm not really doing anything unless they come down in price. And then I'll also get a nice check-in on the fundamentals with most of these companies, not all of these companies, as we get through the new year, probably the third or fourth week of January, as they report their December quarter results. But as you see here, and as I mentioned just now, Synopsys, SNPS, we're going to get a look tonight when they announce their quarter, and I'll be back on that one. So we'll see what happens. I'm pretty bullish about tech overall. I just don't like the valuations. And because I own all these names, most of them have done extraordinarily well, actually. I've had some good tech picking within the tech sector. And of course, the tech sector yet again in 2024 will significantly outperform the S&P 500. And the S&P 500 itself will return over 20%, which is about twice its historic average of about 10%, at least the S&P going back to 1926. So we'll see what happens. I'll report back. I'm thinking that we might have a little bit of turbulence based on a lot of things. Some of them are geopolitical and Trump related. I bet we're going to get our opportunities, as you always do in technology. Just wait a bit and the weather will turn. But I'm circling up here the ones that I'll buy today and the other ones that I will buy on any dip. Reach out to me. I often have buy limits that I can share with you on these stocks. All right, with that in mind, let's next get to the tech trends. Here are the tech trends, things that I'm following, things I think are particularly significant, and things that I think have a wide-ranging impact. First of all, you guys know, and I also do this in my class at the Citadel here in Charleston, South Carolina, you know I like to watch rates because we need falling rates to support the valuations of some of these expensive tech stocks. So if you take a look at the CME FedWatch tool, they're giving it this morning a 74% chance that when the Fed meets again on December 18th, that they will lower the Fed funds benchmark rate by another 25 basis points. I usually concur with the consensus on this score, but I'm telling you, because the Fed has told us that they're data dependent at this point, I think a 74% chance is actually too high. I think it might be more balanced. I think there's a chance if inflation rears its ugly head again, even a little, that they might take this meeting off and not lower rates at all. But right now, that's only a 20 some odd percent chance that it's going to happen. I think it's higher than that. I'd say a 50-50 between the Fed at the next meeting doing nothing and then continuing to lower rates to the tune of about 25 basis points. This is interesting. Xiaomi and Huawei, which are the major tech companies in China, are, for the obvious reason, desperate to independently produce their own components for their systems, including EVs, including PCs, including smartphones. And it seems to me that they're getting pretty close to accomplishing that. That could be a little worrisome if they have components independence from the United States on these key systems. Stay tuned. I actually think that would be a blow for us and something that we're giving up with all of this tit for tat between the US and China. The antitrust, what I call blitzkrieg, continues. Remember, some of this is the Federal Trade Commission and the Department of Justice has some ongoing suits against some of your favorite tech companies, particularly Alphabet, and they want to close the door and settle some of these cases before Trump sits down in the chair on January 21. So expect that to be an uptick in activity. And if it doesn't get done by January 21, does Trump decide to continue on with some of these cases? Or does he say, let bygones be bygones and move on? We'll see. I think his influence by Elon Musk might have something to do with that. Next, the other thing that the Biden administration is rushing to do is they allocated all those billions of dollars when Congress in 2022 passed the CHIPS Act. Now they have to allocate that money before the clock strikes midnight. And so the other day they did pay Intel $7.9 billion. I think that might have been a dumb move to build its plant, particularly the one that's the mega plant or fab semiconductor facility outside of Columbus, Ohio. This is kind of interesting. I talked about this last time. It looks like, based on Trump's comments as recently as yesterday, that he is going to prohibit the merger of the Japanese Nippon Steel with the U.S. company, U.S. Steel. I actually think that's a bad block, because I think U.S. Steel is pretty desperate and they could use the resources from the much stronger Nippon Steel. Anyway, it looks like it's a done deal. The done deal means it ain't happening. Next, I told you, and I continue to believe, not only are we getting some good quarterly reports from publicly traded companies like the 4 or 5 we had last night, including the big one, Salesforce.com, but we are seeing a number of tech IPOs being ready to launch as early as the first quarter of 2025. Remember, I told you my favorite, and I think it's going to be the biggest IPO of next year, is CoreWeave, which is in cahoots with Nvidia with cloud data centers. But anyway, on a broad trends perspective, when you see privately held companies in later funding rounds get bigger and bigger and bigger valuations, because we've seen that the last couple of weeks or months, and you also see the early 2025 IPO calendar start to heat up, that is a good sign for the sector. That's a good sign for the sector. Next, we have had, ever since Scott Bessent was named as Trump's pick to be the U.S. Treasury Secretary, I called a Bessent trade to offset the Trump trade. The Trump trade is aggressive tax reductions and tariffs. Well, Scott Bessent, and Wall Street really, really likes this guy. He's a super successful and super respected hedge fund manager. Looks to me that he might rein in Trump with some of these policies, being more careful and more judicious about lowering the corporate tax rate and the personal tax rate for us in this country, and also maybe putting tariffs on all of the bad guys around the world, particularly China, but maybe not to the same extent that was originally advertised when Trump was on the campaign trail. So Wall Street very much likes the Bessent trade, which dulls some of the impact of the Trump trade. This is kind of interesting. Of course, it's Australia, and nobody goes to Australia really for tech leadership, but Australia looks to block social media for kids under 16. What happens if that becomes popular? That is a big, big deal. And who would be impacted? The social media companies that, because of their social media presence, like Meta and Alphabet, have billions upon billions and upon billions of digital advertising revenues. We'll see what happens. Next, Canada is one of the countries, including Mexico, that Trump wants to add tariffs. I think he talked about a 25% tariff for our trading partners to the north and south. Now, no surprise, as soon as that was announced, Canada has sued Alphabet. Remember, I told you about the regulatory onslaught against Alphabet, probably because a little tit for tat based on the threat of these tariffs. Anyway, you'll see more of this. It's just going to get nasty. Here's another weak electronic vehicle data point. General Motors is selling its stake in a electric vehicle battery plant in Lansing, Michigan. Now, Lansing, Michigan, and Michigan is the heart and soul of this company. And so another real, I think, stick in the eye for EVs. Now, even Tesla's EV business has slowed, but the legacy companies all hustled to get in the EV game, and now they're hustling just as fast to get the hell out. It seems like, at least for the next generation or so of car buyers, they want the hybrids. They don't want the pure EVs. So you might have seen yesterday, all in one day, you had a leader of a country, South Korea, announce martial law. And then later in the day, he was thwarted by his legislature. And then by the end of the day, reversed the order for martial law. But anyway, martial law in South Korea is super serious for the tech sector. In South Korea, you have SK Hynix and Samsung. Samsung's the largest consumer electronic company in the world. And Samsung and SK Hynix, along with Micron here in the United States, one of the stocks on my long-term buy list, dominate the market for memory chips, and specifically HBM, high bandwidth memory chips that are absolutely critical for these AI systems that go into AI data centers. Really weird happening all overnight, last 24 hours in South Korea. And the last thing I think is kind of interesting here is, this is probably an indication of further slowdown for Apple, particularly in its iPhone business. Remember, it was supposed to explode with the mother of all iPhone cycles driven by AI. Not so fast, methinks. But anyway, Apple has paid, and I think it was just like a direct payment, no product or service exchange, $100 million to the Indonesian government so they would not ban the iPhone 16. Kind of interesting. And Indonesia could potentially be a pretty important market because they have a population of 278 million people. And that's not as big as the United States, but still it's one of the biggies. But a very interesting transaction, let's call it, between Apple and the Indonesian government. It does not bode well for this bull thesis on Apple that iPhone volumes are going to explode. I actually think iPhone volumes are going to be subdued in 2025, and then maybe we get the AI kicker in 2026. I guess the last thing I'd like to say is I just got off a panel this morning where I was the moderator on Wall Street Beats, and we have a very strong technical analyst. And this guy is named Kevin Baker. And he was showing some charts today which would tear your hair out. So his thesis was the DOGE, the Department of Government Efficiency, that's going to be run by Musk and Ramaswamy. It is for real, man. It is for real. Because take a look at the charts of some of these defense contractors. Raytheon, Lockheed Martin, General Dynamics. These stocks have gone straight up for years. And now they've broken below 200-day moving averages. These could be shorts because the threat of the DOGE and all this cost cutting in the federal government is not just campaign rhetoric. It is for real. And some companies are really going to be torched because of it. And it looks like despite the saber rattling against our enemies, defense spending will be one of it. We might want to short some of these names. So with that, those are my thoughts, and let's get to some of your questions. Any thoughts on Axon? You know what? If you'd like me to, I'll follow up and I'll have thoughts on it, but nothing comes to me at the present time. Sorry. Netflix is pushing its limits. Can it keep going? I actually think so. Netflix I own for a lot of my accounts, and the stock is doing so well, and this implosion by Comcast forcing them to spin out their cable outlets. You see that the cord cutting is accelerating. You see that these legacy companies are trying to get into video streaming. The problem is Netflix is so far ahead, and because they're so far ahead, they have so much free cash flow that they can have the biggest slate of content. And then it's a self-fulfilling prophecy: more content, more subscribers, more free cash flow to keep the content lead. So the other guys are screwed. Netflix is great. They had a really nice quarter last quarter, but I'm waiting to buy more on a dip. I think right now it's just expensive, but fundamentally, I've never liked it more. Any chance of the export rules on chips being drastically changed under a new administration? I think you will have even more restrictions on exports from the Chinese and to the Chinese. So the former will hurt us more. But I think, and we've seen this with the Bessent trade I was telling you about, the fact that Scott Bessent has been named U.S. Treasury Secretary, and he's well respected and known to be a cool customer. I think that some of the threats, including export restrictions on technology and also tariffs on trade, are going to be coming. Yes, we will have higher rates for tariffs versus the Biden administration, but I think it's going to be a little bit less aggressive than had been advertised. So yes, you're absolutely right. These are coming, but when they say drastically changed, I don't think so. I'm hoping we're going to have a happy medium. Well, folks, that's all we have today. Thanks for listening in. I am easily reached. Check us out down here in the Charleston, South Carolina Bayou, Harvest Portfolio Manager. That's where I do my work. You'll see me all over online. Wall Street Beats is my other show. I'm the tech analyst, the tech voice, no surprise. And if you ever get down here, I'll meet you over at the Citadel, which is our military college, where I teach finance and financial accounting. Until next time, you guys, if I don't see you, be very well. And we'll catch you next time with more and more data. We're going to have a very explosive slate of data in the second, third, and fourth weeks of January as companies announce their fourth quarter results. Be well.